I do have a question about the current climate of, we're in a rate inflationary increasing environment. It'll go down again in the future, who knows when, but like, how does looking at an investment change when your rate to borrow, if you are borrowing to buy these investments, how does that affect or change, or does it is this a good deal for me to buy into or not? My money's costing me so much more.
It's definitely important to realize, like, real estate has been an investment vehicle in environments where there's 20% interest rates and 2% and everywhere in between. So there's always opportunities. It all boils down to the numbers and the rate of return that you're going to be getting. So if you're investing short term, like, it's a little chaotic out there right now. Interest rates have been a little crazy. It's been sudden. Prices certain folks out of the market, or there's some folks, buyers or sellers, just kind of holding out, wait and see kind of thing. And then there's the potential of a looming recession. So if you're flipping houses, my advice is proceed with caution. Have extra padding and whatever it is in your hold time. Maybe you'll take plan on it taking longer to sell. Plan on maybe selling for less than you're anticipating. Be very, very careful on your comps. But from a long-term perspective, if the numbers work, if you can get the numbers to work, you're going to be okay. Now, I'm saying long-term. That does not mean 6 months or 12 months. I'm talking 5, 10 years.
Yeah.
If you have that long-term horizon, and you can stay in an investment for that long, and it makes sense, it makes financial sense for you, you're going to be all right. Residential real estate is a historical low inventory. We have a lot of demand in the market, even with today's interest rates, a lot of demand in the market. And with Gen Z being the largest, actually millennials have been the largest demographic in American history. They're currently at their peak home buying age. Gen Z has even more, it's an even bigger demographic than millennials. The oldest of them are 21. So they're just starting to get into the housing pool. Like, there's a ton of demand coming down the line. Long term, you're going to be okay, but it has to make sense. Finding the right debt solutions, whether you're going to go conventional or private or hard money or investment banks, and there's a lot of ways you can finance them, and it's got to make sense. If the numbers work and you have that long-term horizon, you'll be okay.